Hello, my name is Sean Steele. I'm a financial planner with ClearLogic Financial. Thank you for joining us today, and I'm glad you're here. Today we're going to be talking about the infamous Form 278. I'm going to put my email address up here. I'm not going to be able to answer live questions today, but if you do have a question or comment about today's presentation, please feel free to send me an email. I'd be happy to answer your question. So if you're joining us today, chances are you file what's referred to as public financial disclosures. Let me offer you both my congratulations and my condolences. Congratulations on a successful career in public service. As a former Fed myself, thank you for your service and thank you for everything you do for us. My condolences. I know that when you're filing a Form 278, the requirements are very confusing, the rules are very confusing, and the requirements are many. There's many parts of your finances you have to disclose. In my practice, we combine financial planning and investment management into a single service, and part of that includes helping federal executives and professionals prepare their Forms 278. And a big part of our practice is dedicated to federal professionals and executives. So when I'm meeting with a new client for the first time, I ask, do you have to file financial disclosures? And if they say yes, I ask, okay, do you have to file Form 450 or Form 278? If the answer is, I don't really know. I don't know which one I file. That means they file Form 450 because the disclosure requirements are so involved and the rules are so confusing for the 278 that no one forgets that they have to file the 278. So today we're going to take some of the mystery out of the 278. We're going to talk about what you have to report for yourself, for your spouse, and for your dependent children. You have to report information about your family income. You're going to have to report information about your debts, your investment transactions, and even your gifts. But as we work through this today, I'm going to point out some common mistakes that I see people commonly make. And I'm also going to point out some tips to help make your financial disclosure requirements a little easier. We'll take some of that burden off just a little. Okay? So with that, we'll get started. There are 9 parts to the 278. The key thing here to know is you're going to have to report information for yourself, your spouse, and your dependent children. And there's different parts depending on whose asset we're talking about. So in part 2, that's where we're going to list your employment assets and income. That's going to be your assets and your IRA. If you have an old 401k or an old retirement plan, that's where it's going to go. It's going to go right here in part 2. Now, we tend to think of this section as being employment assets and income. It's not necessarily limited to just things that are related to employment. Now, it might surprise you that gambling winnings are reported in this section. Now, I have no idea what gambling winnings have to do with your employment as a federal employee and what they have to do with employment. As a financial planner, I certainly wouldn't suggest gambling being a part of your financial plan. But if you do have gambling winnings, let's say you took a trip to Las Vegas and you won a hand at blackjack or poker and you won, this is where you report it, right here in part 2. Okay? So for your spouse, that's going to be reported in part 5. Okay, this is where your spouse is you're going to report your spouse's IRA, a 401k, 403b. This is also where you're going to report your spouse's salary. Now, you do have to report your spouse's salary. The rule here is if your spouse earned more than $1,000, you have to report it. So the only exception is if your spouse works for the federal government. You don't have to report that. So let me give you an example. My wife is an attorney for the Patent and Trademark Office. I work for ClearLogic Financial. My wife does not have to report her salary. My salary would have to be reported. So, because I obviously don't work for the federal government. So, the other thing to keep in mind is you also have to report assets that are not related to employment at all. So, you might have to report your brokerage account, 529 plan. You might have life insurance that's reportable. You also have to report your bank balance. Okay. So, that's going to give us the lay of the land here. That's going to give us a lay of where things are going to go. So now let's talk about what you have to report. When do you have to report an investment? The rule here is you have to report an investment when the value at the end of the year is more than $1,000. Or if you received more than $200 of income. So 2 questions to ask. How much did I receive? How much income did I get? Okay? Now, the fair market value is going to be fairly easy. That's going to be fairly straightforward. You can use your statement at the end of the year. Whatever that balance was on December 31st, if it's more than $1,000, you have to report it. Now, the income is going to be a little trickier. Okay, we've got 3 rules that we're going to have to keep in mind. All right, here's our first rule. The first rule, and this is an important one, for the Office of Government Ethics purposes, income is considered received when you owe taxes on it. If you don't owe taxes on it, they do not consider you as having received that income. So let's talk about an example. Let's say I own $900 of ABC stock and I hold it in an IRA. Okay. That stock produced $300 of dividends. Okay. Do I have to report it? So it doesn't have to be reported based on the fair market value at the end of the year. We're under $1,000. What about that dividend income? In this case, you do not have to report it. The income in an IRA, those dividends in an IRA, you don't pay taxes on it until you take the money out. So the the Office of Government Ethics, does not consider you as having received that income. So that does not count for financial disclosure requirement purposes. Now, let's change this fact pattern just a little. Same stock, we have $900 of fair market value at the end of the year, and we have $300 of dividends income. But this time, instead of holding it in an IRA, let's assume we hold it in a brokerage account. Do we have to report it? This time, yes, we do. And the reason is because when you receive dividends in a brokerage account, they are taxable when you receive them. So since they're taxable, it's considered as having been received. Therefore, we have to report it in this case. Okay, so now, a logical question here that you might have is, if I don't have to count income in an IRA, but I do have to count income in a brokerage account, shouldn't I just invest in a tax-deferred retirement account, my TSP, an IRA? Should I even have a brokerage account at all? Because if I do have a brokerage account, I'm going to increase my financial disclosure requirements. Yes, you should have a brokerage account. I'm going to give you a short answer, but I do have some articles on our website that I encourage you to check out on this topic about why a brokerage account is important in retirement savings. The short answer is having a brokerage account is going to reduce your tax liability when you get to retirement. It's going to stretch those retirement savings out. So it's a very important part of your component. Most of us don't save in it, but I encourage you to do so. A TSP and a tax-deferred retirement account like an IRA, 401k, 403, all these should be major parts of your retirement savings. Absolutely. They should not be the only part of your retirement savings. Okay, there's more on that on the website. Okay, so now our next rule. We have to aggregate income from ourselves, our spouse, and our dependent children. So we aggregate the income from a single source. So let's give you an example here. Let's say I have a mutual fund, and let's assume it's in a brokerage account, and it paid $150 of dividends. And my dependent child has that same mutual fund in my child's name. Do I have to report that income? So my child also received $150. So individually, we're under the $200 threshold, but you have to combine them together. So collectively, 150 plus 150, $300. We're over the $200 threshold. We have to report. So don't forget to aggregate for yourself, your spouse, and your dependent child from the same source. Okay, there's a related one here. We have to aggregate all types of income. Okay, what does that mean? Let's say a mutual fund paid $150 of dividends, and it also paid $100 of capital gain distributions. Okay, so in case you're wondering what a capital gain distribution is, let's say a mutual fund owns stocks, and they sell some stocks during the year at a gain. Those gains are going to get distributed to you, the investor. Okay, so those gains are getting passed on to you. That's income. So those are capital gain distributions. So the rule for Office of Government Ethics and financial reporting on your 278 is we have to aggregate the dividend plus the capital gains. So 150 plus $100, we're over the $200 threshold. We have to report. Okay. Now, once you've determined that you have to report something, what do you have to report? Well, there's 5 things that you potentially have to report. Okay, so the first thing you're going to need to report is the name of the asset, okay? The name of the stock, the mutual fund, etc. Okay, now the second thing you're going to have to report is it an accepted investment fund? And I've got the definition up here. Now, a common mistake people make, and this is especially true if previously you were in the world where you were filing Form 450 and you were filing the private financial disclosures. In that world, you did not have to report diversified mutual funds at all. So the mistake people make when they get to 278 is they think the 278 and the Form 450 are exactly the same. They are not. The rules are completely different depending on the fund, depending on whether you file Form 450 or 278. You do have to report mutual funds in 278. So most funds are going to meet this definition, okay? Most of the funds on the product you're going to see on the market are going to meet this definition. So now you might be asking, if I have to report it, why is it asking me if it's an exempted investment fund? And the answer here is, if it does not meet this definition of an exempted investment fund, not only do you have to report the fund, but you have to report every single withholding in that fund. So let's say you have an investment that does not meet this definition. You have to report the investment, and let's say the fund holds 100 stocks. You're going to have to report each one of those stocks. All 100 of those stocks are going to have to be reported on your 278. So having a fund that does not meet this definition is going to increase your reporting requirements. Now, in my practice, we use broadly diversified low-cost mutual fund ETFs that meet this definition. And it's going to, if you do that, it's going to streamline your reporting a little bit. Okay? So that brings us to now the balance. You got to report the value of the fund. Next is the income type. That would be like whether you received capital gains distributions or dividends. So you got to pick which kind of income you received. That information would be available on your statement. And then the last thing you have to report is the approximate amount of the income you received. Okay, so that's the 5 things that you have to report. Now let's work through an example so that we can kind of see how this plays out when you actually have to submit all this data. Okay, we're going to look at an IRA and a brokerage account, and we're going to assume that both the IRA and the brokerage account hold the exact same investments. So we can kind of see how the reporting is different between the two accounts. Okay, so let's start with the IRA. Now with the IRA, as you recall, we don't worry about the income. So you'll notice here that there's nothing reported for income type. So in a retirement account, you don't have to report income type, but you do, and you also don't have to report income. So you'll see here, we've checked the box for none or less than $201, okay? So you don't have to worry about income in the retirement accounts for either the mutual fund or the stock. Now, let's look at the brokerage account. Okay, for the ABC stock fund, it's an accepted investment fund. We report the value. We don't have to report the income type, so this is another advantage of using accepted investment funds, is you don't have to mess around with worrying about the income type. You don't have to report that at all. You do have to report the income, but now let's look at the stock. The stock we have to, it's not an accepted investment fund, so we put not A, report the value, we have to report the income type, and we have to report the income amount. So with individual stocks and bonds, your reporting requirements are going to be a little bit more involved than if you use an exempted investment fund. Okay, so that gives us some broad things about investments. Now let's talk about some things that are easy to forget. People commonly forget their bank balance and life insurance. Let's talk about the bank balance. You do have to report your bank balance on Form 278. The threshold for this is if your bank balance at the end of the year was more than $5,000, or if you received more than $200 of income, you have to report it. So now, good news here. The income probably not going to be an issue. In today's interest rates, if you're getting $200 in income per year on your bank balance, congratulations, you have got a very nice emergency fund. But most of us are going to have to report it based on having more than $5,000 of cash in the bank. Now, a couple rules here that we need to keep in mind. We have to aggregate the bank balances at the same institution. So aggregate different types of account at the same bank. So you have to aggregate your savings, aggregate your checking, combine those two together. And also, don't forget to aggregate balances for yourself, your spouse, and your dependent child at the same bank. So don't forget to aggregate. All right, life insurance. Whether you have to report life insurance or not is going to depend on what kind of life insurance you have. There are generally 2 types of life insurance. The first type is called term insurance. It's pure insurance. It's just insurance, and it covers you for a specified period of time. If something were to happen while the policy is in force, the insurance company pays the claim. Okay. The second kind of insurance is called permanent life insurance. Okay, there's three different kinds of what we refer to as permanent life insurance: whole life, universal life, and variable life. Now, what these three types of insurance have in common is they typically have a savings component and or an investment component to the policy. And it's that savings component that's triggering the reporting requirements here. All right, so the rule here is you have to report the life insurance if the cash surrender value at the end of the reporting period is more than $1,000. Okay, so that may be different than the face value of the policy, so make sure you're using the cash surrender value. More than $1,000, or if you receive more than $200 of income. Okay, you have to report it for these three. Now, you may be noticing that there is more reporting requirements associated with the permanent life insurance products, whole life, universal, and variable. In our practice, what we do is we do an analysis, and we look at a client's resources, we look at their goals, and we do an analysis to see how much life insurance they need and for how long do they need it. And that way, when they're meeting with an insurance agent, the insurance agent can recommend a product that is most appropriate for their overall financial situation. In my experience, most people have not had a financial need to have life insurance for the duration of their life. They usually only need it for a specified number of years. So that's how you report life insurance. If you have an annuity, you can have a fixed annuity or variable annuity. These are insurance products as well, and they are treated similarly to whole life or a variable life policy. So the annuities are going to be treated very similar to life insurance. Okay, reporting transactions. Okay, so we've talked about the investments that how we treat investments, our bank balance, and our insurance. How do we report our transactions here? Okay, so the general rule is we report transactions greater than $1,000 that you made for yourself, your spouse, or your dependent child. Now, I have a question for you. Let's say you invest $200 every month into a mutual fund. So every month, $200 is automatically deposited into your mutual fund. And at the end of the year, you've made investments totaling $2,400. Do you have to report the transactions? After all, we've aggregated everything else so far. It would make sense to aggregate the transactions. Here, the rule is we do not aggregate. So I got good news for you here. So this would not be a reportable these transactions would not be reportable. You don't aggregate the transactions. So you only report transactions if the individual transaction is $1,000, more than $1,000. Okay. So if you have your account set up for dividend reinvestment, that's another way this issue can come up. You only have to report it if the individual transactions investing the dividends are more than $1,000. Okay, so don't aggregate. Now, the other thing you have to be aware of is if you're buying individual stocks and bonds, you also have to file a 278T when you make the transaction. Okay. Now, the general rule is if you've already reported something on your 278T, you don't also have to report it on your annual 278. Okay. Office of Government Ethics says you've already reported that transaction. We already know about it. You don't have to include it on your annual 278T. On your annual 278. One exception. Some agencies will require you to report your transaction both on the 278T and again on your annual 278. So if you are buying individual stocks and bonds and you have to file a 278T, check with your agency to see if you have to file it and report it again on your annual 278. Okay, if you're buying exempted investment funds, you don't have to file a 278T. Just report it on your annual 278. Now, I'll give you a little tip here. In our practice, you might be looking at this going, wow, there's a lot of detail here for these investments that I have to report about the information I have to provide about the investments. I have to provide information about transactions. This is a lot of information. It is. In our practice, I'm going to give you some tips that we use to avoid to help you minimize your reporting requirements. Avoid strategies that result in frequent trading. Okay. Avoid trying to time the market. Avoid trying to pick the next hottest stock. Avoid day trading. Okay. These things are going to make your financial disclosure requirements a lot more burdensome. Okay. In our practice, what we recommend is clients pick an allocation that's appropriate for their age and their risk tolerance, and stick with it. It is both good for your finances and good for your financial disclosure reports, okay? It's going to make your life easier. Okay, so some other items people tend to forget about. Outside positions. This is positions that you're doing outside the federal government. This is for things like where you're serving as a director, a trustee, an executor, a consultant. We tend to think of this as paid positions, but it does not have to be paid positions. So let me give you an example. Let's say you're serving on the board of your homeowners association's board of directors. You're serving as a director, you have to report it. Okay? So even though you're not getting paid, you still have to report it. Even though those are volunteer positions, you're still going to have to report it. Let me give you another example. This one comes up frequently. It's unfortunate, but it's a part of life. Let's say a family member has passed away and you are the executor administering the estate. Do you have to report that? Yes, you do. Yeah, you've got power over financial decisions when you're administering an estate. You have to report it on your 278. Okay, so don't forget about those two things. They're common, they come up frequent enough. The other thing that I'm going to mention here is deferred comp. So if you join federal service, if you were previously working for, say, a government contracting firm or something like that, and you're now in government service, perhaps you participate in a deferred comp. I'm going to mention this for those of you that might be considering leaving federal service as well, because let me explain what a deferred comp is. The way deferred compensation works is it allows you to defer part of your income and receive it when you leave the company. So what that allows you to say is, let's say while I'm working for the company, I'm in a high tax bracket, but I'm planning to retire in 5 years. I'm going to be in a lower tax bracket then. I can say, I want to defer receiving part of my salary when I'm up here, when my tax bracket's up here, and I want to receive it down here. So it allows you to defer receiving some of your compensation. If you were participating in one of these plans before you joined federal service, you have to report it. So just keep that in mind. The other thing to keep in mind are our debts. Debts. Okay, so we have to report debts greater than $10,000. Like with our investment income and our bank balance, we have to aggregate the debt. So we aggregate debts owed to a single creditor for ourselves, our spouse, and our dependent children. Okay. Now I got good news here. There's a lot of exceptions to this rule. Okay. Car loans. Do you have to report car loans? No, you do not have to report car loans unless the loan value exceeds the purchase price of the car. So that's when you'd have to report a car loan. So if the loan exceeds the purchase price of the car, then you have to report it. What about your mortgage? That's probably going to be more than $10,000. Do you have to report that? Probably not. Okay, there's only two circumstances when you have to report a mortgage. The first one is on your primary residence, you don't have to report the mortgage unless you're renting it out. So if you're renting it out, then you have to report it. The other exception is if you have the fortune of being in a position where you were appointed by the president and confirmed by the Senate, you have to report your mortgage. Okay, in that circumstance, you have to report the mortgage on your primary residence. Unless an exception applies, but there's only a few exceptions, so odds are you're probably going to have to report your mortgage if you were appointed by the president and confirmed by the Senate. Okay, if you have a loan on a life insurance policy, let's say you have a permanent policy that had some cash value in it and you took a loan out on that policy, do you have to report that? No, you don't have to report that. Gifts. All right, the rule here. Gifts. We have to report gifts over $390. Okay, but I got good news. You don't have to report gifts from a relative. Okay, and relative here is defined very, very broadly. It includes stepchildren, step-parents. It includes in-laws. It even includes fiancés. So do you have to report birthday gifts? No. A birthday gift from a relative you don't have to report. The Office of Government Ethics doesn't care about your birthday presents. So happy birthday, but you don't have to report it. So that gives us a sense of what you have to report, as all the things that you need to be aware of when you're preparing for your Form 278. Be sure to remember, aggregate your investment income, aggregate your bank balance. Don't forget, do not aggregate your transactions. Don't report income in your retirement accounts, your IRAs, 401ks. Do remember to report your bank balance, outside positions. And if you have reportable life insurance, don't forget about that. If you have any questions or comments about today's presentation, please feel free to send me an email. Thanks again for your attention today and joining us in the webinar. I hope you enjoyed it. Thanks again for your service. And if you have any questions, please feel free to email me. Look forward to hearing from you soon.